You might have heard that many millionaires usually have about 7 different ways they earn money all the time. On the other hand, most regular people only have one way they make money, which is usually their job. Back in the old days, your grandparents might have been okay with just one way of making money, but that's really hard to do nowadays. In this video, we're going to tell you about the 7 different ways millionaires make money, and give you advice on how you can do the same. Number 1. Earned income. Earned income encompasses the money you gain through active participation in work, or dedicated time spent on projects. This means money you get from having a job, getting paid by a boss, or getting paid for doing specific tasks. For lots of people, this is the main way they earn money, and it's where self-made millionaires often start building their wealth. These earnings help self-made millionaires start looking for more ways to make money, and also help them with their everyday expenses. It's important to know that many millionaires work as CEOs in many companies. This doesn't always mean they own the companies, they just have jobs in those high-up roles. Meanwhile, for the average person, earned income may originate from traditional employment or even freelance work. It's essential to bear in mind that the term job has been humorously referred to as just over broke, indicating that income from such sources may merely cover basic expenses without leaving room for significant financial growth. Furthermore, there exists a ceiling on the potential earnings from traditional jobs, constrained by personal capacity and the finite nature of time. For example, if you worked 10 hours each day and made the most money you could, which is $30 per hour, you would earn a maximum of $300 in a day. This limitation arises from the fact that we all have the same 24 hours in a day, and thus, expanding this income source is bounded by time and individual capabilities. This type of income reveals limitations in terms of time and personal capacity, which hinder substantial individual output and growth. Additionally, earned income is often subject to higher taxation, with an average tax rate of around 40% in the US, leading to a substantial portion of earnings being directed towards government taxes. Lots of people feel safe and comfortable with a regular job and the money it gives them, but this can stop them from reaching their full abilities. Once this comfort zone is established, people often become content with their regular paycheck, and any expenses beyond that threshold may be covered through credit card usage, resulting in financial challenges. Becoming a millionaire mainly from just a job is really hard, unless you also use smart ways to invest and find other sources of income, which we'll talk about soon. Number 2. Profit income. This pertains to earnings obtained by selling a product or service at a price higher than the cost of producing it. This can encompass various levels, including wholesale, retail, distribution, or manufacturing, particularly concerning goods. Currently, the digital landscape provides various tools to create this income source, whether you have a small or large amount of money to start with. Engaging in this income stream requires having an entrepreneurial mindset. Even though it might take a lot of time to understand at first, if you keep trying, you can eventually get really good results. Whether you're making money online or in person, profits can really help you earn more and get closer to becoming a millionaire. However, it can be risky, and making mistakes can lead to losing a lot of money. To lessen these risks, doing a lot of research on the things you want to sell is very important. Enlisting the guidance of expert consultants for product development, marketing, and prudent fund management, especially in the inaugural year, can help steer clear of potential pitfalls. Many people say that a lot of businesses close down in their first year, usually because they don't manage their money well enough. Using apps or getting help from a skilled accountant or money manager, if you can help prevent this from happening. For many individuals, profit income and earned income represent the sole avenues of earnings they are familiar with. Often, the awareness of the existence of 5 additional viable income streams tends to be overlooked, each offering the potential for substantial earnings. Number 3. Rental income. This is about making money by renting something you own to someone else. This asset could encompass various entities such as office spaces, parking spots, residences, or even entire buildings. The property you're renting may fall within the realm of commercial or residential real estate. A while ago, if you wanted to invest in this way, you would have needed a lot of money. Back then, you had to buy a house or apartment first if you wanted to make money by renting it out. But nowadays, people are making lots of money by renting out their homes and putting them on websites like Airbnb or Booking.com. Basically, you just need to make a deal with the person who owns the property. This avenue presents itself as an exceptional means of significantly increasing the digits in your bank account. Number 4. Interest income. Now, even though not many people use this way to earn money, it's important to remember that millionaires are not very common either. This avenue of earnings arises from the act of lending money in return for accruing interest. This can take the form of depositing funds in a bank via government-issued treasury bills or extending loans to individuals, although we don't strongly advocate the latter option. This way of earning money is pretty reliable, but it doesn't give you as much back in return. The interest rates are usually around 1 to 5%, which might not be as appealing when compared to other options, but it's too early to completely disregard this choice. This income source doesn't need you to be actively involved in the investment process, making it an excellent source of passive income. Additionally, it's one of the safer choices you can make. Although some people might have doubts about this way of earning money, it's important to think about how your money can grow over time, and you don't have to work too hard for it. These factors can potentially outperform the previously discussed income streams. Number 5. Dividend income. This way of making money is really good, because you don't have to do much to earn it, and on top of that, you become a real shareholder of the company. So, how does this mechanism operate? When you buy shares, the company assigns them to you, making you a shareholder and co-owner of the company. Depending on the policies of the particular company, dividends will be disbursed to you on a monthly, quarterly, or annual basis. Dividends represent a portion of the returns derived from your ownership of the company's shares. Now, here's the really exciting thing: you might not have to pay any taxes on this money you earn. How is this achievable? Well, if your standard income falls below the threshold of $44,625 annually, you qualify for a tax exemption on your dividend earnings. On the other hand, if you make more than $491,700 in a year, about 20% of it goes to taxes. Still, this rate is much lower than the taxes you'd pay on the money you work hard for, and it's known for being one of the lowest tax rates. Despite its considerable benefits, this income stream tends to be undervalued and often overlooked. If you invest wisely in big and trusted companies, you could end up getting really rich. It's important to note that the money you can make could also increase, due to capital gains arising from fluctuations in the share price. Undoubtedly, this option is a great way to make a lot of money and work towards becoming a millionaire. Number 6. Capital gains. Among these choices, this way of making money is quite popular. It materializes through the appreciation of owned assets, resulting in increased value. For example, let's say you buy shares at $100 each, and after a few months, you sell them for $150 each. The resultant capital gains amount to $50. In the same way, if you buy a house for $200,000 and then sell it 5 years later for $500,000, the profit you make would be $300,000. Most often, capital gains happen with stocks and real estate, but remember that different things you own can also make this kind of money for you. What's really cool about this way of making money is that the taxes you pay on it are usually not too high. Depending on the earnings amount, taxation rates for income generated in this manner can be as low as 10 to 20%. In certain instances, this tax rate can even descend to zero. By using this way of making money, you can make your total worth higher, and also reduce how much you legally have to pay in taxes by a lot. If this isn't an amazing way to become rich, it's hard to think of a better idea. And number 7. Royalty income. This income source provides a clear illustration of the essence of passive income. It's about making money that keeps coming in even after you're done working on it. To cultivate this form of income, you must devise an original product, concept, or process, which others will subsequently employ for a fee. By allowing others to utilize your creations, they shoulder the active effort while contributing a modest portion of their proceeds back to you. For instance, Consider a musician whose music is streamed on platforms like Spotify. They earn royalties over specific periods based on the extent to which their music is played. In today's world, business investors often take advantage of this way. If you watch shows like Shark Tank and other programs where people pitch their businesses, you'll see that a lot of deals end with a set amount of money earned for each item sold. Another illustration applies to franchises. For example, if you start a Subway restaurant, you'd give them money every year to use their marketing ideas, how they run things, and their brand. Authors receive compensation for every copy of their books sold by publishers. A prominent case is evident in the earnings garnered by J.K. Rowling from the Harry Potter series. She receives payment for the utilization of her book characters in films and various other merchandise. However, it's important to note that this type of income is among the most challenging to establish. This is largely due to the prerequisite of crafting something truly distinctive that resists easy replication. The creation of such assets demands a unique skill set, yet once accomplished, the potential for earnings becomes virtually limitless. That concludes today's video. I hope it was informative and beneficial to you. If you found it helpful, please give it a thumbs up. I welcome your feedback, so feel free to share your thoughts in the comments section below. Lastly, remember to subscribe and turn on notifications so that you don't miss any future videos. Thank you for watching, and I'll see you in the next one.